Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is July 11th, 2025. I am Luna.
I am JPMorgan.
Okay, so let's start with the good news. The stuff that grabbed the headlines, U.S. stocks.
Yeah.
They didn't just edge higher, they actually soared to new record highs. We saw the S&P 500, the NASDAQ, the Dow Jones all closing at fresh peaks. So what were the key drivers here? Any particular sectors really standing out?
Absolutely. I mean, the usual suspects, the big tech giants, they stayed strong. NVIDIA, for example, its market value closed above $4 trillion. First time ever. But maybe more surprisingly, we saw a real resurgence in travel and airline stocks. You had Delta jumping, 12%? And United Airlines up 14%. That was driven by some really optimistic, bullish forecasts about travel demand. So not just tech.
Right, okay. So booming stocks, tech strong, but also travel's looking up. Seems like optimism, right? But here's where that contradiction really bites. Because while all this good stuff is happening, something else, potentially much more disruptive, was brewing.
Well, exactly. And if you connect this to the bigger picture, one major tailwind, something kind of pushing the market up despite other worries, was the Fed. Fed Governor Christopher Waller, he hinted pretty strongly at a July rate cut. He actually said monetary policy is just too tight and that he could consider cutting the policy rate in July. He even admitted he was in the minority on that.
Okay, so that's a pretty clear signal.
Yeah, it's what we call a dovish stance, basically signaling easier money, lower interest rates are potentially coming. And that immediately boosted hopes for, rate cuts happening sooner rather than later. It put down short-term yields like the 2-year Treasury yield. Investors generally love that signal.
That's interesting. It's like the market just heard rate cut and kind of forgot everything else for a moment. It really shows how powerful just a few words from one Fed official can be. But the fact he said he was in the minority, does that mean this optimism might be a bit, fragile, maybe premature?
That's a really critical point. You've hit on it exactly. While one voice, especially saying what the market wants to hear, can definitely move things short term, that minority comment is a dose of reality. It suggests the path to actual rate cuts isn't, totally clear yet across the Fed. So yeah, vulnerable is a good word.
Right. And then almost out of nowhere, bam, this curveball lands. Late in the day, President Trump announces this really steep 35% tariff on all imports from Canada, effective August 1st. And he didn't stop there, did he? He warned about maybe 15-20% tariffs on others, like the EU. What was the immediate reaction? Did the market just shrug it off?
Oh, definitely not. The reaction was fast. The Canadian dollar, it tumbled over 0.5%, hit its weakest level in months. That's a direct hit. And U.S. equity futures, which trade after hours and give a sense of the next day, they'd been up earlier, they quickly paired those gains. Gave most of it back. S&P 500 NASDAQ futures slipped about 0.4%. And you saw those trade-sensitive sectors, think industrial machinery, materials, they came under pressure right away in after-hours trading. I mean, markets have gotten used to some trade talk, but 35% on Canada, that's a big jump. And Brazil was already talking retaliation from a different tariff.
Okay, so pulling this all together, what does this mean for you listening right now? It feels like markets are doing this balancing act, hopes for cheaper money from the Fed on one side, and the very real, maybe escalating risk of a trade war on the other. It's like selective attention almost.
That's a good way to put it. Looking ahead, the Fed's meeting in late July is now huge, absolutely critical. And the inflation data, the jobs numbers coming out before then, they'll basically dictate if the Fed can actually be as dovish as Waller hinted. Beyond the Fed, these trade tensions are just a major overhang now. There's the risk of retaliation, which could mess up corporate supply chains, autos, agriculture are vulnerable, and likely drive up prices for consumers, for you. And let's not forget, Q2 corporate earnings season starts next week. Analysts have already been trimming their forecasts, partly because of tariff worries and maybe slowing growth, so those earnings will be a real litmus test for whether this market rally has legs or if it's just built on, temporary optimism.
Yeah, the last day or so really hammered home that tension, didn't it? Hopes for Fed help are providing a lift, but these trade conflicts are looming large as the main threat. Feels like we should probably expect more of this day-to-day choppiness, this volatility.
Absolutely. Which leads us to maybe a final provocative thought for you to consider. In a world where markets can literally hit record highs at the exact moment global trade wars are intensifying, how might you need to rethink what stability even means anymore? And what does this kind of contradiction tell us about the new rules for navigating financial news?
Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver days key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.